Yinson Holdings' wholly owned unit, Yinson Clover, has scored an FPSO charter contract from Repsol SA's subsidiary, Talisman Vietnam. The deal is worth $1 billion or about 4.4 billion ringgit. Yinson will be involved in the supply, operation and maintenance of an FPSO facility located in Cha Rong Do field offshore Vietnam. Repsol is the operator of the field, while Petro Vietnam Exploration Production Corp, Mubadala Petroleum and Pan Pacific Petroleum are the other owners. The contract is for a firm period of 10 years with 5 yearly extension options exercisable by Talisman Vietnam. Under the deal, Yinson Clover is required to enter into an agreement for the novation of all rights and liabilities under the contract to Petro Vietnam Technical Services Corp. The two parties will then form a JV company with Yinson holding 49% stake. The contract is expected to contribute positively to the group's bottom line from the fiscal year ended January 2020. Malaysian firms are encouraged to make full disclosure on the remuneration of individual directors and top 5 senior management officials on named basis. This is among the practices advocated by the newly enhanced Malaysian Code on Corporate Governance. According to the code, a detailed disclosure would allow shareholders to make an informed decision when voting on the approval of directors' remuneration and to consider the appropriate remuneration package. It would also allow them to understand the link between senior management remuneration and the company's performance. The code also encourages companies to have at least half their board members made up of independent directors by year end. For large companies, meaning firms on the FTSE Bursa Malaysia Top 100 Index or those with at least 2 billion ringgit market cap, more than 50% of the board members need to be independent, and at least 30% of the board should consist of women directors. This is to improve impartiality in decision-making and effective oversight of management. The family of Sarawak tycoon Tiong Hiew King have issued a statement denying rumours of his passing. The 82-year-old is said to have been hospitalised in Singapore for a stroke after collapsing at his home last Thursday. Yesterday, the rumour mill went into overdrive over his alleged demise. However, according to his youngest brother, Tiong Hiew King, his health is in fact improving and his condition is stable. King added that the doctor is satisfied with his brother's progress and asked that the media and timber magnate be given more space and privacy to recover. Tiong is ranked by Forbes as Malaysia's 9th richest man with a fortune of $2 billion. He set up Rimbunan Hijau Group in 1975 and controls 4 major listed companies, namely Media Chinese International, Rimbunan Sawit, Jaya Tiasa and Subur Tiasa. Bursa Malaysia saw its first quarter net profit rise due to share trade income. Earnings came in at 56.6 million ringgit, up 13% from a year ago. Revenue climbed 6.5% to 142.7 million ringgit. Total segment profit stood at 95.2 million ringgit, an increase of 10.2%. The securities market saw profit climb to 80.8 million, an increase of 16.8% thanks to higher trading revenue. As for the derivative market, profit stood at 14.9 million ringgit, down 9.8%. This was a result of lower operating revenue and higher operating expenses. Going forward, Bursa Malaysia says it will continue with its initiatives in creating a vibrant and sustainable Malaysian capital market. Developers of London Battersea Power Station project is set to achieve less than half of its original return target as rising costs and economic uncertainty curb appetites for expensive homes. The mega project is set in the heart of downtown London, is backed by Sime Darby, SP Setia and the EPF. The development will generate an initial rate of return of 8.2% based on current projections. This is far lower than the 20% target set before borrowings agreed at the start of the project. According to Battersea Power Station Development Co., the most significant driver in IRR reduction is cost inflation, but added that nothing is changing on what is being delivered at the project and it doesn't affect the considerable progress to date. At the moment, over 4,360 homes are due for completion by 2025. According to Bloomberg, however, the company wants to lower the cost and change the phasing of construction to meet affordable housing requirements, and says that the firm wants flexibility from the council to change the timetable for the construction of the project, which would boost the IRR above 9%.